It's been a relatively flat day in the market today, and that's nothing to look too much into after a pretty aggressive growth tech day yesterday. But it isn't such a flat day after hours as earnings are coming out. We're seeing Microsoft down big and Google up big, about the same in either direction. Why is that? And what does it tell us about the future and what's going to come next? Well, Microsoft has seen a lot of tailwind. There's been a lot of work from home, a lot of LinkedIn from home. LinkedIn has grown substantially in this period as people have been working from home. A lot of people have been fired, laid off, whatever it is, looking for new jobs, just spending more time on social media. In addition, Xbox and gaming revenue up big time, helping Microsoft there. But that's looking into the past. Google is beat, and Microsoft did beat on earnings expectations, but looking into the past. Google, on the other hand, beat earnings expectations and has stuff to look into the future as their business grows with the economic rebound. Let's not forget, most of Google's revenue comes from advertising. And a lot of their biggest advertisers, think travel and leisure companies, airline companies, aren't advertising at full capacity right now. So the fact that they have been beating earnings expectations, making a ton of money, and announcing a $50 billion stock buyback program indicates that this is a business that's booming and it's going to continue booming and is looking into the future and future earnings. Now, Google indicates a whole lot about the economy. They are reflective of companies' willingness to spend and invest in their businesses. And as we said, airlines, travel companies, etc., have not experienced their full rebound yet. So what is tied in very much with these companies? Energy companies, which are very cheap. These companies deserve a position in your portfolio. Don't be one of these fund managers who's so woke at Harvard University who chooses to divest in energy. That is not the approach. Anyone who chooses to do that should not be a fund manager. They are simply not seeking the maximum return because energy stocks are incredibly cheap. They look like a total buy right now, and our price of oil is up. It's where OPEC wants it. It's where these companies are making a ton of money. You saw British Petroleum this morning. They're making a ton of money. I'm sure Exxon's going to come out this week later. They're making a ton of money, and it's only going to get better as this economic rebound and reopening continues. So don't sleep on this trend. Get on it now. Start receiving that dividend. Buy it at these prices. You've missed a little bit, but I think it's still early in this stock's trajectory. Look at Google. You could say Google, a couple months ago, you might have been too late. Not the case. Up 4% after earnings today. Just goes to show you oil, which has been hated for so long, could be at a generational buying opportunity, as most of these companies, believe it or not, especially to the woke people who clearly aren't doing their homework, are looking to transition to renewable energies and provide the future of energy. These are cash cow businesses that produce a lot of money. Now, that is a story that doesn't even consider inflation. And inflation is certainly happening. We just listened to the Mondelez CEO say, yes, we increase prices every year, but this year we are considering bigger price increases and we are experiencing inflation more. Anecdotally, I go to this barbecue place called Terry Black's Barbecue. I normally pay some $14.87 for my meal. Today I'm paying $20 for lunch. That is crazy. But that is in the center of inflation, the nicest cows. We're looking at all these food prices. Look at corn. Corn's up over 100%. That is going to bleed out into other areas of the economy. We've seen it in copper. We've definitely seen it in lumber. We're gonna and have been seeing it in oil and expect that to get into other consumer areas of the economy. In addition, another restaurant, Cane's, up from $1.39 to $12.49. It's happening. It's here. I don't know what else to tell you. Buy the commodity stocks because they are highly correlated with this. That's energy. Energy is a commodity. It's very important. As things get more expensive, energy gets more expensive as people go out and spend in the economy and travel again, and energy supply has been cut, the price of energy will continue to rise and the cash flow of these energy companies will continue to improve. In addition, they've made, being squeezed by the belt, improvements to their cost structure. So these are fantastic businesses to own. I encourage you to do so. Not a whole lot happening today on this flat day, but position yourself correctly for the long term. Definitely get some exposure to energy and hold it. And until next time, peace out.